Yo, good morning, everyone, and welcome to the Morning Market Report, guys. We had a lot of red on the crypto market right now, hourly and the daily, all in the red. Looking here at the Bitcoin chart, we can see right there. Nice. We talked about this yesterday at the end of the show. I said, guys, I'm really concerned about a rejection on the 4-hour dynamic reactor, and that's exactly what we got. Came right back down to our 1.236 fib extension. We're going to be watching this close today. It looks like we're pushing down below that. Are we heading back down? Was this a lower high? Look at that. I mean, lower high. That's what that is. Looks like to me. Guys, we're going to talk about that, but also October, end of cycle. Some analysis, some charts, some data. We're going to break it all down, look at that. And then also we did get job numbers today. Not looking good. Pretty much securing that we will see rate cuts here on September 17th, even maybe 50 basis points going into October and December. We're going to break all this down and a whole lot more today on the Morning Market Report. You guys know what time it is. Take your seats. Get your notebooks out. Classes in session. Let's do it. Good morning, everyone, and thank you for joining the Morning Market Report. We got a lot of data to go through today. Let's go ahead and get our screen down here. There we go. Brought to you by Chart Prime, as always, right here on the Piper Academy Network, guys. Looking at this chart, though, we are seeing some sell-off in the markets today. We're going to go through the crypto bubbles and take a look at that and look at the TradFi side, because TradFi, they're all green. But I'm going to say not for long today. Well, I think we're going to see a red market at the close of today overall. But you know what? There's I'm always bullish for. Always gives just the green candle world, right? The euphoria of the pump. It's when I get to do my show with my co-host. Let's go ahead and bring him up. Mexican Superman, what's up, bro? Got that curl going. Look at you.
Oh man, and not for much because my wife wanted to take me to the hair cutter, not to barber. Of course, that I mean she can find where. Yeah,
we will lose. We will lose half of our 25 live viewers on YouTube right now if you cut your curl off, man. Just tell her don't touch the curl. Say you can trim it all up, Clint. Don't touch the curl, bro. But hey. Tell her if you do, you'll end up looking like me. So that's the secret there. Secret sauce. How you doing today, man?
I'm doing pretty good. I mean, I have a very good night sleep yesterday. I mean, by the way, yesterday we didn't have a show. We have something going on in the support part of the Chart Prime. Nothing too serious, but I want to say that, dude, I'm so proud of the team that we have on Chart Prime support. Like seeing, like this situation happening. I got nothing too serious, but everybody just doing their job, knowing what to do, calling each other out, and well, basically just working like a clock. It required a little bit of my attention, but I was basically there to watch, right? So shout out to Chart Prime support team. You guys are fantastic. You are phenomenal.
Yeah,
so
they got great support. Customer service over there is amazing. Yeah.
And you see I went to like the back doors. They're fantastic.
I went to go do use the previous data for today's video, and I was the last person, so there was no BC Port Corp, there was no OC. I'm just out here solo running a channel. It's okay. Alex O does it. I can too, damn it. Let's go jump in and give a shout out to the chat, guys. Who all we got in here? We got Alexander G. Dutchie's in here. Buck is in there. He said, good morning, crazies. He must be talking about his community within the community there, the crazies. No, actually, he's talking about himself. Buck is crazy, if you don't know. Purple Yogurt in here and with us right now. Alexander GR Mod Queen Retro Mike Tech is here. K Diggity Harp. Who else we got in here? Wix Wi-Fi 89. Awesome to see you here. Harp, appreciate you. Mike Play. Melissa saying good morning. Good morning to you, Melissa. How you doing? Gear, he said gang, out of gang. He came over even though they were not redirected to us. He came over to join us, so I appreciate you coming over here. Duality C, I see you there. Duality C, See you there? See, you can see what I did there? Trade Intuition, Bingo, Bango, and Rashad in here with us. I appreciate everyone that has joined us here in the chat. Guys, we're going to go ahead and jump into, oh, I see BC Port Corp. He's been sick. I hope you feel better, bro. Seriously. DDT, awesome. Baba Yaz, aka Bedridden, in here with us. And then Trade Intuition on the treadmill. Can't type. Get it, bro. Get it. Get it. All right. OC. Let's go take a quick look at Bitcoin to see what's going on with the price on that. We are getting a sell off like I thought we would continue down to here. Let's go take a look at that. Let's get into this news. Let's talk about the so what of today's data. And then I want to talk about this analysis and this multi-confluence thing that we're seeing here, talking about an October top of the market. And then I'm going to get your take on it because I know you're like, no, it's only the current top of the market at the local top of the market, and then we're going to pull back, and then we're going to rally again for a super cycle. OC and I got some differing opinions here of how this market's going to roll out, but that's a good thing. We're not an echo chamber. If you're listening to an echo chamber and they're all telling you the same thing that you think in your head, you need to go outside your box a little bit and get some other noise in your ears. That way, you don't get groupthink. Groupthink is a bad thing. So, OC, let's head it over to your charts and let's take a look and see what you're seeing on Bitcoin right now. What you got, bro?
Absolutely. So let's take a look at our setup that we have been following for this week, right? So we jumped in here. Then weekend Monday came out. We have just a little bit underwater here, a quick pullback in here. And then right here in this candle, we were talking about taking some profits. So we should be having already taken some profits either here and there, either of those days or those candles. And then finally yesterday we hit our main target. So basically taking 75% out of the current trade. So remember, we are also at zero lows because our stop loss it's already at entry, and also just a little bit of buffing here to compensate for any fees that we might be hitting in case this candles comes all the way back down here, right? But so far so cool. I mean, I think we're gonna be having a big retracement in here. So let me just get rid of a couple of things in here, and the next area that I'm gonna be looking into is gonna be right here once again at 108, same area that we were looking before. So, and that is because, I mean, we went to the bottom of this range, we made the fake out, we hit almost the top of that range, and then coming back down, we still creating lower highs and lower lows. So I would say the actual good scenario would be creating a double bottom, all right, or a macro double bottom, or something around those areas. So let me just get rid of this. This didn't play it out, which is fine. And counting this double bottom as a single one, and then maybe going for another either double bottom or slightly higher low would be the better scenario. And that is because we will be putting right there a bottoming pattern. But if not, well, brace yourself, because I think we could be going for another lower high. We can calculate that that lower low in an easy way. Like, for example, we just measure the drop or the high, right? And we go once again and measure that kind of like a drop. And once again, we measure that kind of a drop. And they are kind of like playing the same way around. And as you can see, almost right here in the middle between two areas. So that's why I'm going to be pushing it a little bit lower, somewhere right there around the 105. In fact, I'm going to set my alert right now, right here at 106 for my next possible entry. Still, I'm going to be using this other trend line to, of course, create an alert. So I have an earlier alert and I keep track on how Bitcoin is moving. All right. And really quickly, guys, I know you don't see it right now, but since yesterday we didn't have a class, when we go over some altcoins, I got prepared a lot of altcoins that I wanted to check out yesterday, today. So we're going to be looking also into those. So turning it back to you, Piper.
Awesome. So we will make sure we run through this news fairly quickly so that you have time to do those alts today, man. We'll get you going there. Shout out to Gear. Gear, from the Otter gang over there. He said, I saw your stream go live and I like your daily updates. I appreciate that, man. We get up here every morning and try to put out things that everyone's not talking about, but everyone should know. And that's, I appreciate that. That's, it's having that effect. So, thanks for being here. That is awesome. Let's go jump over into the news, OC, and let's start breaking this down. We'll come back and take a look at what we're seeing on some higher time frame Bitcoin setup, and then we'll take a look at them alts, and then talk about is October the end of the cycle, according to some analysis and some charts. We'll see. Let's jump over here though to the news, guys. Looking at the metrics right now on Into The Cryptoverse, currently sitting on the risk indicator at 31.4%, price sitting at 41.4, and then of course on chain at 52.7 on the risk indicators. Social summary is still super low, Baba Yaz. If you're wondering why it's not on there, that is why. Looking at the crypto market cap total right now at $3.809 trillion. The trend line on that is at 4.304 trillion, and we are currently undervalued in total for the total crypto market cap by 11.5% from that median red line. We just cannot seem to break above it. We've touched it a couple times. We've been within 1 to 2% of breaking in above the undervaluation line. And yeah, not hitting fair value at all this cycle. So looking at Bitcoin right now, we are at 52.9% risk level. That is still a 2x on the Piper Plan DCA. All in our Discord. If you guys don't know, man, it's probably the most solid approach to dollar cost averaging out there. Everyone talks about DCA. No one tells you a plan to DCA. They do static, like, all right, I'm going to do it every week. I'm just going to do $10, right? We actually do a dynamic DCA plan, which is way more powerful because the further down that it goes, the deeper it goes, the more of the multiplier. So instead of 10, it might be 20, 30, 40, 50. And then we have loaded up for the spring, right? And then we also have a take profit, which talks about, hey, there's 70% wristbands and stuff. So we do that for Bitcoin, Ethereum, BNB, Sol, XRP, Doge, ADA, Avalanche, Polkadot. There's a bunch of them in there, guys. So or Aave, I should say, not Avalanche. But yeah, you guys check it out. It's the Piper Plan, and it's the long-term approach to dollar cost averaging and how to get out of the market and protect your profit. So let's go over and take a look at the Bitcoin dominance. Looking at the Bitcoin dominance with stable coins right now sitting at 57.62%. Take those stables away, we're still at 62%. Bitcoin dominance holding up fairly decent there when you take the stable coins out, meaning a lot of the money that is eating into dominance is going into stable coins, not altcoins necessarily. Where are we with the altcoin season index? Well, we're at 60.87. We're about 15 points away from actually being considered alt season, and that is when 75% of the top 50 alt tokens have a greater return on investment than Bitcoin for the past 90 days. And so looking at this right now, 28 tokens have an ROI greater than Bitcoin, 21 do not. We are not at the 75% mark, therefore not technically alt season according to this methodology. Jumping over to the 24-hour liquidation list, guys. In the past 24 hours, 97,397 traders got liquidated. Total liquidations coming in at $243.58 million. Largest single liquidation order happened on Binance. It was World Liberty Finance. What do you know? For $2.34 million. I told you guys, don't touch that thing. It's bad. It's really bad. Looking at Fear and Greed Index right now for Bitcoin, we're currently sitting in neutral at 51. Moving down to Ethereum, we're at 52. And still sitting in neutral there on that. We're going to talk about this in a second, and we're going to talk about that data in a second. Yep, we'll get into all that in one moment there. LBC giving a nice summary of that economic data, but I want to look at the economic calendar first and talk about that. Looking at the crypto bubbles, guys, Bitcoin down 1.2%, just changing from 1.1 as we flip down here, currently at 109,776. Ethereum's down 2%. Let's go look for the big movers on the downside. 3% on Cardano. It's sitting at 80 cents. What else we got? 3.8% on Hedera. That's it, man. We got a lot of stuff here on the moving up the list, though. Athena, DAI, Aave, Monero, and Uniswap all moving up the list into close to that top 20, but not quite there yet. Right now, though, guys, looks like we do have quite a bit of red on the charts today. Looking at the stock market right now, it was all green. All three of these were green a little while ago. And like I said, it looks like we were going to close in red. Yeah, Dow Jones is now down 0.07. There goes the S&P down 0.03. The NASDAQ down 0.13. The volatility index is slowed down, sitting at 16. But small caps are getting some move today. And typically when small caps, Russell 2K, shout out to Lunar Beaches, when Russell 2K gets some hopium in it, we see some action on alts. So it's going to be interesting when we head over to OC to talk about those, because that's the only thing that's green today. Let's look at the Europe markets overnight. Mostly in the green, and then look at Asia, Nifty 50, Japan, India, the ASX 200, all in the green. HSI and Shanghai were in the red overnight. Bonds market, folks, can we get a round of applause in the chat? The 10-year yield has broken below 4.2. We have not seen this in a hot minute. We're at 4.19, guys, just below it. The 10-year yield is starting to show some weakness here, meaning it's being bought up. There we go, 4.188. This means people are starting to buy the 10-year yield. As the rates come down, that percentage comes down, it means people are buying it. They don't need to offer as high, right? So we are seeing the 10-year yield get bought up here. One thing I will point out, a lot of times safe haven money, when they think the markets are unreliable or the sentiment about the markets is not looking good, 10-year yield will get, the treasury bonds will get bought up. What else gets bought up? Gold, which is still around $3,600 right now, taking a pullback after an all-time high yesterday. But gold eases, all eyes on U.S. jobs data. We're going to talk about that in just a moment. Let's go ahead and jump into that now. ADP change, guys. We were at 106,000 previously. This is a revision from the 104, so it went up to 2K. They thought it would be about 65,000 on the ADP employment change. Came in at 54K. Let's go talk about that. Private business in the U.S. added 54,000 jobs in August instead of what they were expected of 65,000. That's not a lot for private business, guys. We're seeing a slowdown on hiring for private sector, okay? Then we get the initial jobless claims. This is your weekly unemployment filings, okay? Was at 229,000. They thought it would be 230, 232. No, came in even higher. 237,000 people this week filing for unemployment. ISM services also was at 50.1. They thought it would be 51, 50.7, came in at 52. So we are seeing an increase on ISM services for August 2025. Beating the forecast 51. The reading pointed to the highest expansion in the services sector in 6 months, driven by faster growth rates for business activity and inventories. Offsetting these positive indicators, however, are the continued contraction in employment, a 16-year low for backlog of orders and elevated prices. So some mixed data coming in on that ISM services. Now, tomorrow, guys, we're going to get the non-farm payrolls and the unemployment rate. I think that this actually might even get beat. 4.3 is what I think we will come in at, but it is very possible we see it even higher. Let's go back and talk about this data and this thread from the Kabisi letter. And then we'll talk about what LBC said and what a couple of other people said, and they're not wrong. U.S. labor market is in trouble. Job cuts surged by 88,736 in August 2025 alone. It's the highest August total since 2020, when we were in a lockdown, guys, and they were cutting jobs because everyone was closing. This brings the year-to-date total up to 892,362 job cuts. That's up a whopping 66% compared to last year, which was a really bad year for the labor market. So what's happening? Let's take a look here. Aside from 2020, there's not been an August total that exceeded 85,000 jobs since 2008. What happened in 2008? What was that? Oh, that was the Great Recession. That's right. We are seeing 2020 and 2008 like job cuts in what many have called a strong economy. Not sure how that works out, but we'll go with it. And it's not all Doge anymore. While Doge cuts accounted for a massive 292,279 job cuts year to date, it's also the economy. The second most cited reason for workforce cuts, responsible for around 200,000 cuts, is market and economic conditions. The Fed will lean on this in September, pretty much, like I said, securing that we will see a rate cut on September 17th, about 13 days from now. Store closures led to 131,030 layoffs, up near 50,000 year over year. Furthermore, cost cutting through restructuring aka we replaced you with AI, led to 96,871 cuts and bankruptcies. Bankruptcies. That business is gone. It's gone. Where to go? Wow, bankruptcies really are gone. I can't even get to it. Bankruptcies are causing the biggest one. Massive 35,744 cuts. Last but not least, we have clear data that AI is beginning to replace humans. Okay, so there's your AI count, 20,219. So that is what we're seeing on these job numbers. I want to go back here and show you what LBC said, because he made a really great comment. If you guys don't follow LBC on X, you should. He said, here's your data drop breakdown. ADP non-farmer payrolls. He went through all that, gave all of the revised non-farm productivity, gave the revised unit labor cost plus 1%, meaning that it's costing more for less workers. Trade balances going on here. We had our import versus export trade balance there was negative 78.3 billion, slightly worse than the 77.7 billion forecast, sharply worse than the 60.2 negative billion prior. Trade gap is widening right now. Takeaway: labor market, both ADP and claims point to slowing momentum, inflation pressure, productivity up, labor cost cooling equals disinflationary vibes. Macro theme: Fed rate cut odds are staying high. Data leans dovish overall. Wild card: widening trade deficit could weigh on the GDP. This smells like stagflation to me. Meet Kevin said highest layoffs since the thick of the Great Recession outside of COVID is what we saw. And then Lewis Raskin, shout out to him. He said most people are scared to invest. And I want to say this is probably the most important wrap up to all of the data that we just looked at here. Then when they become financially literate, they learn that the scary thing is not investing. And I will say that that is a very true statement, because even if we do get the market pullbacks, those are going to be, I'm going to be running for the markets hard if we get big pullback areas off of this economy, because I think that with what's going on right now, with the workforce, with the economy, with the trade deficit, the GDP, all of this is telling me that you gotta put your money somewhere, or it's going to be worth nothing. And to me, I think it's solid things like Bitcoin, it's solid things like gold, it's solid things like maybe some yield bonds, stuff like that are going to give you more than the 40% loss on the U.S. dollar's buying power that we've had since 2000. So in 25 years, we've lost 40% valuation on the US dollar. Diamonds, remember those? Hey, always have diamonds for emergency. Guys, diamonds may be a girl's best friend, but they're your portfolio's worst nightmare. Prices have fallen to the lowest level in 100 years for diamonds. So it's not diamonds. I'll tell you that. It's not diamonds. What else we got here? I think that's about it on X marks the spot. Let's go look at the chance of rate cuts and how are we looking on this off of all of this data that came out this morning, what's coming out tomorrow and all that good stuff. What are we seeing here? 95.6% chance for a rate cut in September. Guys, look at this. 97.9% chance of a rate cut in October. But what is that? That is a 51% chance of a 50 basis point cut in October. And then December, we're seeing the same thing. Yeah, it's a 99%, I think it was. Yeah, 99.7%, but 42.8% chance that we see 50 basis points in December. The economy knows that it's in trouble, and Wall Street knows it's in trouble. CME Group, they know that it's in trouble. And so it looks like some of these rate cuts are not just becoming quantitative easing, they are emergency responses to put a floor in here somewhere before this plane hits the ground, and it might hit it pretty hard. Might be a hard landing. I do want to remind you guys, historically, when we've done bigger rate cuts like this and we've started to rapidly cut, that's followed by a recession. Historically, going back over 100 years, almost 90% of the time, we end up in a recession off of that. Look here at the into the crypto liquidation max pain levels, guys. Short max pain, that means the max pain for the short traders. What will hurt shorts the most right now? That would be about $119,000, $118,950. That's about 8.46% away, and it would be $205.6 million in liquidations. Looking at long max pain, they're talking 107, 148. It's about 2.3% away for us right now. That would be $174 million in liquidations to hit that level. And I think that is it before we get into this article and this chart and all that good stuff. Let's go ahead and pop it back over here. Bring it up to OC. OC, bad job data, man. And we're seeing stuff that we haven't seen since 2008, worse than COVID in some of these cases. We're going back to 2008 numbers here, and now they're ramping up the likelihood of seeing 50 basis point rate cuts, which historically, again, recessionary indicator there. What are your thoughts on this? How the market's going to hold up to this? Is Bitcoin digital gold yet, OC? That's the question.
Oh, it pains me to say, but no, it's not digital gold. And that 99% chances, I still seem weak to me. I don't know. Something about that 99%, it's still not convincing. Yeah.
I'll take my chances. Thanks.
And then we hit it out, right? I mean, that'll be hilarious. The point is that, I mean, data is there, right? Despite my perspective might be a little bit different, remember that we all have kind of like the same overall dynamics, right? If we get rate cuts, we will see a little dump and then a big pump on especially altcoins because the market reacts that way to the rate cuts. And if we get them in September to compensate for September, well, then we might be seeing cutting short that dump that we're expecting, right? The fact of the matter is that in daily we are bouncing off dynamic vectors so far. Yes, we have a negative candle right now, and in the lower time frame we could be expecting for a lower low, right? But also, what if we have that double bottom? That would change stuff, right? And that will also change my perspective of Bitcoin short term and longer term. I still stand for we need a big pull down, right? And if you hit over my chart, let me show you something really, really quickly. All right, so this is dynamic reactor. Dynamic reactor have some air on the current market, but if we bring up just a little bit of my drawings, and please ignore the rest of the spaghetti, let's just focus on this lining here, right? You see that this parabolic line, despite being drawn on hand, it catches very nice the shape of 1, 2, and 3 touches, right? So let's just zoom in here, right, and see what we got. Well, we had a bunch of boxes in here, but absolutely not much else. So to look at how we bounce from here, well, I would say that we should be either dumping to somewhere around 96K or ranging, right, somewhere around 105. Absolutely. Look at that spaghetti. That could be perfect. More perfect. All right. So if we get here, look at the date down there. I know it's very close. It's very small. It's minuscule, but that put us at November 17, right? Making that range. So there is another possibility that right now I am thinking, all right? We'll see how those rate cuts come in, right? Maybe they're being pushed at the end of September, hopefully. Not 100% sure of that. But if that happens, well, we might get the pump on November instead of December while we range throughout this bad data. And why are we going to be ranging? Because remember, buy the rumors, sell the news. So everybody might be just holding their horses, trying not to sell crypto because everybody's expecting those rate cuts, right? So again, I do expect that we should be, or I do want to have a big retracement in here, especially if we break this parabolic area. That is when I will be saying, hey, when we break this parabola, we are in the bear market, all right? But we're not there yet. We're very far away from that. And if we go to another really quick, there we go, section, remember, we are still not exactly on clutch, but we should be heading to the 132 area if we follow along this pattern that is just a copy of what happened in here before the last drop. All right, so a little mix up, but at the end of it all, I believe that we should be having a little bit more rundown unless we find that top or bottom. And well, then targets for me, short term, it is between 90K and don't get me wrong, and 130, right? I mean, targets between 0 and 500K, right? So there you go. No, but in all seriousness, if we start losing dynamic reactor, I'm gonna be looking at 95K, and if we start bouncing, like for example, hitting a 116, then I'm gonna be looking at 130K, right? So it depends on this area. If we bounce or we fail the dynamic reactor.
Awesome. Well, let's go talk about some of those levels, OC, because I actually have a $157,000 reason target to talk about, and then October being that window, and then later on in the year, 50,000 is one target that for the bear market bottom talked about in this article, and then we've also got one that's about 37, and I think you actually have a money flow POC that actually coincides pretty close to one of these numbers. So let's go jump over to here. Come on, OC. There we go. We'll come over here. We'll talk about this first article, guys. Looking here, Bitcoin bear market due in October with $50,000 bottom target, according to analysis. Whose analysis? We'll find out. Bitcoin may start a bear market next month if the 4-year Bitcoin price cycles are still valid and hit a bottom a year later at around $50,000 bottom on Bitcoin. Bitcoin is approaching the start of its bear market if the 4-year cycle theory is still valid. Bitcoin's price target includes 50,000 for October 2026. That's 1 year from now. And then Bitcoin is currently battling a resistance line that could spark a $100,000 support retest, which we've talked about for over 2 weeks here on the show. Pretty interesting. That number is just everywhere right now. Bitcoin could have just 1 month before the end of its 4-year cycle, triggering a $50,000 collapse. New comments from Joao Wedson, founder and CEO of crypto analytical platform Alfractal. There we go. Nailed it. Also included a $140,000 Bitcoin price target before that bear market happens. But can Bitcoin escape its scheduled bear market? Bitcoin faces a new reckoning as the bull market endures its latest 15% correction from all-time highs. We gave you a warning on that right here on the Piper Academy Network and told you, hey, probably heading down. We did that weeks ago. We said, here's a swing fail pattern. Merry Christmas, short the market. So amid misgivings over the future, Wedson sees the possibility of a new bear market starting as soon as October. Uploading charts of its so-called repetition fractal cycle to X, he showed that Bitcoin to USD is approaching the time when bear markets historically take over. Of course, it would be reckless to assume that Bitcoin has only a little over a month left in the cycle based solely on this chart. He acknowledges that. But if we take a look here, you can see cycle 4-year with 2 short-term cycles within, and then the accumulation, the markup, the distribution, and then the bear market, right? And this repeats in every cycle, these 4 micro cycles within 2 mid cycles, first half, second half, inside of the single 4-year cycle, okay? We'll go ahead and talk down here and just see what he says, because I got a better chart to actually show. Wedson notes that this cycle is markedly unlike others before, thanks to the presence of major institutional investors. That's the wild card in all of this analysis, right? Bitcoin's ascent to major asset status is in effect right now. The real question is whether this fractal will remain reliable in the face of heavy speculation around ETFs and growing institutional demand. A U.S. macro asset bear market could well form the nail in the coffin for Bitcoin bulls if it coincides with that normal bear market schedule. The question boils down to the status of the 4-year cycle amid increasing debate over its relevance in 2025. OC and Army Piper. OC versus Army Piper. Once October hits and if bears gain strength, Bitcoin price bottom targets already bold now include one more level on the radar for October 2026, and that is that $50,000 mark. So all eyes on the $100,000 Bitcoin price battle. We've talked about this here on the show also. Market participants favor a $100,000 support retest as part of the current correction. One trader even sees that events coming this week. He said the bull market will be over if bulls fail to hold $100,000 mark. I think it's closer to 95,000, 96,000, and I'll show you why on that also. This one chart decides if Bitcoin breaks below 100K or breaks to a new all-time high based on this chart. And he's talking about the breakout retest of this trend line here. OC has showed this on his chart multiple times also. So let's go talk about cycle repeats. Okay, we're looking here on BitBo, guys. This is the Bitcoin cycle repeat chart. And you can see right now they're calling for, let me get it lined up there. They're calling for 157. Why are you not locking in? Lock in on it. There it is. $157,037 on October 11th, based on the repeat cycle for the top of the cycle, 157K Bitcoin. And then you look over here and check out this bottom side that they're talking about. They're talking about $37,000 to $38,000 on a Bitcoin cycle repeat. Okay. Of course, come out here to 2029 and you're talking about a $290,000 Bitcoin out there in 2029, but that's what they're talking about on this fractal. So again, this is setting up for October, also in line with that article. But let's go check out my charts and talk about what I have on here. We've talked about this cycle profit line a lot, guys. The line actually comes in at November 3rd, but if you look at the profit line, the profit escape line, it actually comes in right at the end of October on the 27th of October. So again, based on my indicators, I got about 63 days left in this cycle. According to theirs, they're looking more like about 42 days based on their cycle. So 42 to 63 days based on the range there of cycle tops. But let's talk about this $100,000 range that they're talking about. Great psychological number, sure. But if you look here, where we have this 52-week SMA, this has typically been our support level if we break the bull market support band in the daily dynamic reactor. Bringing that down to that level, that would be about $95,000 to $96,000, depending on how long it takes to get down there. It could even be around $97,000, $98,000. If we look at market bottoms, though, and I want to go to, I think it's this chart, and then I want to go pull up. Well, I'll just do it this way. We'll just do it this way. I can just show you how to do it. We're going to go from top to bottom on a retracement. So lock there, lock there. This is coming in at $38,000 for the 786. And historically, if you go back and look at every single cycle that we've had, bottoms to tops, there we go. Let's do another one. Bottom to top. There we go. Where we come down to 786, right? Go and look at other cycles before that. Get rid of that. Do another fib pull. And let's come down here. Grab that bottom. There we go. Bottom to top. Where'd we come down to? 786. So looking at a 786, you're looking at $38,000 there for that pullback after this for this cycle. If we have a typical 4-year cycle, they were talking $50,000. But OC, I want to jump it over to your chart. And let's take a look at that magnet that's out there. Magnets, sorry, Trade Intuition, talking about magnets on charts. He said there's no such thing as a magnet indicator. Sometimes that's where all of your money's sitting at. Market movers do like to go there. So shout out Trade Intuition. Bingo, bango, bro. But OC, let's look at that chart. Let's talk about that money flow POC on the weekly, because I think that there's something to talk about on that.
Absolutely. So I lost your audio for a little second there. Well, if we take a look at our money flow POC right here on the Coinbase 1 week, we see that it's right here on this area of big disparity, right? Coming in at 38,586. If we zoom in, we'll see that we might have just a little bit of difference of price, right? Trying to get it as close as possible. There you go. 38,500. That is what my POC weekly comes in Bitcoin. So you're expecting that to be the low cycle?
I think that's a line in the sand, right? I mean, we're seeing a lot of things that pull down to that level. I mean, 786 historically has always been where we've pulled back to, and that's coming in right at that line also on a retracement. Of course, if you base that on, that's based on our current high. If we do hit that 157K, let me jump over. We'll take a look at that. I'm going to pull a fib, and we'll base this off of the bottom up to that 157K that they were talking about on the fractal cycles. that would put us at about 45K, which, by the way, ironically enough, take a look at that, OC. It's coming in right in line with your weekly quantum reactor, too. So, nice level of confluence there on both of those charts. But let's talk about that. So, that's if we have a continuing 4-year cycle. But you think, and this according to the article, they referenced it also, with the institutional buy-in, the adoption, and the accumulation of Bitcoin from a lot of these big companies, we may not see that typical pullback of 70% plus. We see a 50% pullback, it might be around that 50K bottom that they were talking about in October 2026. Would that still put you in the mindset of the bottom in 2026 and then continuation of the cycle, or does your extended cycle not allow for that much of a pullback? What's your thoughts on this, man?
Well, my extended cycle right now doesn't allow that much for a pullback, and that is got to do because we need to range, right? So when we see ranging, we overtake the bearish scenario. So we retrace, not retrace, we correct over time instead of correcting over price, right? So having that influx or that barrier where some investors will sell, like Michael Saylor, right? Hey, this is what I don't sell Bitcoin. Well, he never sells Bitcoin so far, but we know like BTC Port Corp might have a different opinion, right? For Michael Saylor in the future. We'll talk about that on the private Discord classes. So, guys, if you are not joining Discord, first you have your DCA, and second you have BTC Port Corp throwing those little candies at you, because that is a very nice thought process that he had going on there. And another part, it is, well, we need for that range to know that we have enough market cap. If we hold that market cap, we know we are right there competing with the big companies, because right now I think Bitcoin, it's going like for that duality of the particle on light. If you know like a little bit of like mechanics, you might know what I'm talking about. Like particle of light behaving like a wave in a particle. So I think that's what's happening with Bitcoin right now. Because we have the ETF, it should be behaving like a stock, and a big enough stock, right? While also being crypto, still being volatile. And I think the sweet in between point, it is a big AF range, right? And that big AF range takes me somewhere low between 88, right? And all the way right down here to 66. So I think this is the liquidity mix point where we could maybe go for the bear lows, right? Somewhere around 68, all right? You have seen the parabolic movement, right? There is a more traditional approach, which is just a trend line. Having a trend line give us a lower target at 90K compared to the parabolic. Let me bring it up. And come on, please, parabola. Do not hide me. Oh, come on, you're gonna be kidding me.
What the fuck they're doing.
Yeah. Dude, I just had it here. Oh, I know. It's just hiding.
We love you, OC. Make a new parabola.
There we go. Let me just hand draw it. So the parabolic movement was like that, right? So basically our parabolic movement would have been right here where we call the bear market, but we still have one more, which is our more classic approach, which is the trend line, would give us a possibility of a fake out and then a hit off, or maybe breakout, retest way higher, somewhere around, again, same overall target, 129, 136, 140, right? It's not that much when we see that we already are up there, right? And then create, like the V-shaped recovery, the range, and finally the spring, the breakout, and a continuation for an elongated cycle. And that's when we hit, somewhere around 200, 300K. If we have a range instead a bear market. Like, for example, let's just take this cycle here, and instead of hitting these lows, we are stuck within this area, and we do exactly, let me show you really quickly. Candles to candles, where are my candles thing? Here it is. So we do this instead. We do this instead, right? So in this case, we have the range higher. We don't lose the previous V-shaped area or the previous big liquidity zone. We don't get the actual bear market bottoms. We range for a longer part, and then later on we kick it off and go farther ahead. So if we take that into consideration, and I will have to manipulate this price action a little bit, just so you guys know, right? We might be having something like that. All right. So that's what I might be expecting for if we don't lose the 68. Well, and being that the market bottom, well, then this is what I'll be expecting now. Actually, come on, I don't remember the word. We're just consolidating the extended cycle theory, but still a theory so far.
Just a theory. All of this is a theory. It's all theoretical. Shout out to Trader Tuition. He brought up one of my favorite discussions that I used to teach in analytics class in the military about possible, likely, probable. They all have a weighted percentage of likelihood, right? And so it's based on some Harvard professor. We use it in the military. So when you tell a commander, sir, in the next 24 to 48 hours, 72 hours, whatever the time period will be, it is possible that we see that's a 30% likelihood. Likely is 50 to 70%. 70% to 90% is probable, and then anything above that is imminent. So yeah, there were
Whoa.
percentages based on words. So shout out to Trade Intuition. Yeah, and those levels that we're talking about, that 50K, that 38K, so on and so forth, those are based on likelihood, right? And so percentage, I would say that we see 50K for a cycle bottom. I would say at this point right now, if we were to do this 157K dump, top and then dump, right? I would say it is possible. How about that?
Or
Likely,
maybe an ass load of
yeah.
bottom.
Yeah,
Wouldn't
like
that work?
there's an ass load of confluence there, approximately 300 pounds. So if you know about that story, there you go. So yeah, all of this is just statistics and theory, right? But we can talk about it. We can speculate. That's what market investment is, right? We're speculating that Bitcoin's going to go to $1 million in 2030, just like we speculate how much money we can make if we have our dry powder ready to go at 39K, right? So that's why I just continue to do the DCA Piper plan. And if we have more than a 10% pullback on and the indicators are showing confluence that we're not bottoming, then at that point I may very likely take some profit out, because obviously DCA and we're in some profit, but looking to hold as much cash as possible for where that market bottom will be. Might as well fill that 36K gap also. Post, you're 100% right. That imminent. There's a 36K gap down there, and if we're down that low, probably fill that CME gap also. Why not? And if you look historically, I got a chart here. Let me pull this over here. Go to BTC 1. There we go. And let's put this on the weekly. There is a CME gap that he's talking about. No, I want to put this on the daily. We'll put this on the daily. He's talking about this one down here. Well, there's one, first of all, at 91 to 92,000. And then there's also one all the way down at like 36K. I'm not seeing it here. Not seeing it. Where is it? It's all the way back here. Yeah, we're way back. We got to go in the way back machine. There is one all the way back at like 36. Did we fill that one? We may have filled that gap, bro. Looking at the daily here, I'm seeing it filled. This one here, which is coming in about 39, it got filled right there. So, but there, I want to show you guys what happened last cycle. This is the one that I was referencing. we had a gap that came in at 23 to 26,000 there at the cycle run up in 2021. And what did we do? It took all the way down. You can see it was a fair value gap. It just dropped right through it in one day and cleaned it out. You know, that was 2022. This is 2021, or 2020 actually. So about a year and a half later, it got filled out. So I'm looking for this 36K one though. Here post. I think that one actually got filled according to this, unless I'm missing one somewhere else, but I don't know that I am. So yeah, it looks like it might have. Damn, it might be on the 1 or 4 hour. Yeah, daily though, daily got completely filled on that 36K one, but we do have one sitting at about 90 something right now. All the other ones at the low level are all filled in for now. So for now, but we do have one from April 22nd, 2025 that comes in all the way down at 91,670 on the daily. So, all right. OC, that is about all we have, unless you got any alt updates. We got about 8 minutes, so it's up to you. You got any other alts, or you want to wrap it up here?
Let's do it. Let's do it.
All right, alts. We'll go into alts. OC, going to you for alts. Let's go.
Let's go. All right. So really quickly, let's take a look at the AIXBT. That is for Kelly Caliphant. That she's been on it. So basically, it is playing out as we were expecting. Very careful. I was expecting right here a bounce, and that's the alert that we had yesterday. We are right on the 0 line, but we haven't seen any more signals for an actual bounce at that area. So what I'm gonna be going for is just slightly below bouncing here, as we have a new shaping here, like barely we had it in here, right? And we're gaining some strength. So do be aware of this possible AIXBT. If we have this area right here, most likely we are gonna be breaking through that trend line. So keep an eye on that, and as always, make sure that we have that trend line set up with an alert, so we are aware of let's also lock this other one at 0.96 so we are aware of movements. All right, let's go to hashtag Ethereum. Ethereum has already breakout, going to the meaningful highs in here, which is actually a range. And we did not break through and retest. Instead, we are bouncing from it, going back to the support here. I would say that this is the last chance for Ethereum to actually be on support. And just because of that, I'm gonna throw in here a 1/4 of a position long. All right, important. I'm playing my chances in here. All right, guys, because we're not right there on the support that I like to be. Like, look at how close to the trend line we were here. Look at how far away from that trend line we are there. And the next thing I'm going to be going is adding my stop loss, and then adding, of course, that always wiggle room in here. And I'm going to be moving my alert in case I get stopped out. And just before I get it stopped out, right here on this alert, I'm going to be adding another 1/4 of a position. Thus, I'm going to be expanding just a little bit more, just to get a 1-to-1 ratio, my entry, which means if I hit this entry right here, my actual entry is going to be somewhere around 426, basically giving me a almost, there we go, come on, a 2-to-1 ratio right here. All right, but so far this is what I'm gonna be playing out, 1/4, and this is just because this is the last opportunity, and we have a trend line breakout retest. So we need a continuation. Target will be at 4,646. Let's go to Solana really quick. We're going on our way down. If you guys shorted it, congratulations. That was the plan. I did not shorted it, by the way, but I'm looking. Yeah, but I missed my entry, man. But if you guys did, congratulations to you. We call that one out. And I'm going to be preparing for the next long right here. Again, this is not a given entry. This is going to be a let's check this out. And this is the plan entry. All right, so let's just keep it as is right here. Let's go to XRP really quickly. This is the weekly XRP, and it seems like we are still hitting it strong in here. And let's draw this trend line right there with 2 hits trend line, and trying to get this hiccup also in line. And I believe that we're not going to be hitting this bottom, but we are going to be hitting the golden line right down there. Let's go to the 4 hours to see where that big line is going. So that is, oh, come on, there it is, somewhere around here. All right, so what I'm going to be going after, there it is looking for a support and resistance very close to that area. So right there, all right? And I'm going to be adding an alert slightly above, so I have enough chance to go for it. And of course, remove my spaghetti a little bit. So XRP, sadly, I see a little bit more downwards on its way, although in the shorter time frame, I am expecting a higher low. If we get a higher low, all right, we have our alerting here. I think we're going to hit the dynamic reactor. And after that dynamic reactor, we'll see what happens. But if we fail this area, well, then you know what next area, 250 for is going to be the next target on XRP. Finally, LDO, it's ranging. I don't freaking like this. It stopped us out last time. We're almost at the end of the show. Yeah, man, this is the thing. It's driving me crazy because look at this. I mean, I want to say short. But look at this. For example, we have a high, right? A high. We have the U shaping here, the next high. So a dead cat bounce, coming down here, a hiccup, coming down here, a hiccup. All right, we have a sort of like V-shaped recovery. And then we have hit to the dynamic reactor retracement higher low. Into the dynamic reactor retracement. Are we gonna get the higher low? Ooh, I don't know. I mean, that's where I'm still at, and we are above the 0 line, so we do have a real scenario here, a real chance. So what I'm gonna be going for is not an actual higher low, but something like a double bottom. All right, and I'm gonna be going like this, and this is again not a given entry, guys. This is what we need to first look at. All right, so let me add it like here, and let's reanalyze. All right, so I think that is, yep, it is wrongly. They don't know what the f they're doing. All right, so don't ask me for spelling. I don't even do good spelling in Spanish. And so far, this is everything that I got on the altcoin. That was a record speed hitting there. Turning it back to you, Piper.
Speed trading with OC guy. Guys, make sure you guys tune in to trade setups with the OC 8 p.m. Eastern Standard Time tonight. He's going to be going live tomorrow morning. Hopefully BC Port Corp is feeling better and is back with Good Morning Crypto. We will be back at 10 a.m. We hope you guys got something out of today's show. If you haven't done so yet, smash the like button. And if you feel so inclined, share it with a friend, because sharing is caring. Guys, we are about to head out of here, and we are not redirecting anywhere today. OC's got a class to go do over in Chart Prime, and I've got to go do some shopping with the wife. She wants to get out of the house and go do some stuff, so I'm going more shopping. I'm doing more shopping. I am a week away from selling my house, by the way. The 10th is the scheduled close date right now on the house, aka dry powder. That's what the house is. So I'm going to get that sold hopefully in a week. I'll keep you guys up to date on that. But we'll be back tomorrow morning taking a look at this unemployment data that's supposed to be coming out, taking a look at this non-farm payroll supposed to be coming out, all that tomorrow morning. So make sure you guys tune in here. 10 a.m. We're going to break it all down and give you the so what of the markets for Friday. Until next time, guys, trade safe. Use some risk management. And as always, peace, love, and profits. Be good to yourself. Be good to others, man. Shout out to Alexander G. Much love, lady. We're out of here, guys. Catch you later. That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done. We'll see you at the next one. What the fuck they're doing. Morning market report out. Boom shakalaka. We'll see you at the next one.
at the next one. Morning market report. Ow.
That was awesome, dude!
Hey, it didn't break. What else you got?